Hi, and welcome to the Stock Scores Market Minutes for August 8th, 2016. Well, this week, let's talk about the stock tip. Even from the best of sources, they're really only relevant at the time they are made, because as time passes, of course, new information comes out, and that can negate the reason for liking a stock. It can also mean that a stock that you don't like one day can be very likable the next, because some new information has come into the market to give that stock some value. The quality of the trade is really relative to the situation, and situations are always changing. You might say, well, I like Microsoft when it's at $30, but if it goes to $40, it's no longer so likable because it's priced in a lot of the information. And so you have to always keep in mind the context of the tip. Also realize that many tips come with bias. There are paid promoters who are out there pushing stories of stocks. There are investment banks who are doing business with a particular company that are doing, buy ratings on that stock for perhaps the wrong reasons. Ultimately, you only should take trades that you understand and believe in. There's nothing wrong with getting trade ideas from other sources, but ultimately take the trade because you understand it, and that way you can react to the new flow of information as time passes. All right, let's get into this week's analysis. An important week because on Friday, on that strong jobs number, we got a little breakout from the sideways range that the market had been in. Now, of course, we had a breakdown that got negated by the breakout, and so we're back into a bullish mood for the market. A very interesting week in how we went from a breakdown to a breakout. Let's see now if we get the follow through to the upside. On the weekly chart, you can see we're just sort of cruising to new highs through resistance. This is a bull trend, looks likely to continue. No reason not to be bullish. Although I should say that most stocks are not actually participating in this rally. This is a rally led by the indexes, sort of a tail wagging the dog type situation. But let's see now as confidence starts to build and optimism starts to build if the strength filters down into the smaller cap issues. And there we see on the small cap index also that breakout. And so that is a positive sign. Volume a little light there, so I'm not super excited about it yet, but it is the summer where volumes are light. So basically we've got a rectangle consolidation with a breakout, a little bit of volatility before the breakout, but this does look like a market that wants to go higher. On the Canadian market, hasn't made that breakthrough resistance yet. Of course, being dragged down a little bit by weakness in the oil stocks. And then, of course, on Friday with the strong jobs number, people think, well, that means the Fed will raise interest rates. Raising of interest rates is bad for gold. We'll talk about that in a moment. And, of course, a lot of mining issues on the TSX. And so it is lagging the U.S. market a little bit. Speaking of lagging, you can see that on the TSX, we're still way below the old highs. So while the U.S. markets are moving to new highs, the Canadian market, heavily dependent on commodities, is lagging, being dragged down primarily by the energy sector and, of course, the sectors that it tends to affect, like financial as well. On the TSX Venture, of course, the strong mining market has this in a nice long-term upward trend. No sign that that is ending. Certainly risky at this point. We've been going up for 1, 2, 3, 4, 5, 6 months. And, eventually you're going to see profit taking in that kind of environment. But normally this would have happened already. You hear the saying all the time, go away in May. And May was really the start of the next leg of the upward trend. So you have to still stick with this, but again, be cautious. Now, of course, that strong jobs number means people think the Fed will raise interest rates. And for that reason, we're seeing weakness in the U.S. Treasury bond market because, of course, if treasuries go down, that means interest rates are going up. That's a great arrow, isn't it? There we go. And this market got a little overbought. You can see the trend line really ran away from the trend line. And so my expectation is we pull back to the trend line here. I don't know that we'll break the trend unless the Fed starts to raise rates. But for now, I expect a little more weakness in the bond market. On the US dollar side, that strong jobs number gave a little jump to the US dollar. And we're continue to be in this optimism building pattern where we're in an upward sloping channel, probably move to the top of this channel near term and then get stuck up there. But I do think the US dollar goes higher, which is negative for commodities like gold and oil. So keep that in mind. And here we are, the gold chart. You can see that that upward trend line has been broken right there. and that should lead to lower prices in gold. Little concern here because this is a top that is lower than the previous top. And of course, we know that upward trends break when you get a break of trend from a falling top. Now, before you get too worried about it, keep in mind that the long-term trend, which goes something like this, is still intact. So at this point, only a little bit of short-term weakness here before we hit that longer-term upward trend line. But I want to be a little bit cautious with gold here. Energy sector had a little bit of strength at the end of the week, kind of an oversold condition where the market went a little bit parabolic to the downside. If we think about trend lines, there's our trend line on oil. We fell away from it. Now we're rising back up to it. I think it gets stuck next week and probably moves a little lower again. Of course, it could break the downward trend line. That would be great if you're an oil bull. But for now, I want you to be cautious, as I do think this strength at this point is a bull trap. Until we get that downward trend line broken, don't get too excited about that strength. Here we see the VIX, all-time lows. Someone sent me a question saying, well, with the VIX at all-time lows, shouldn't it be a buy? Eventually, it's got to bounce. Keep in mind that this is a ETN, which is based on the VIX short-term futures. Well, futures have time value decay. That means over time, their value tends to just go down. And then you get into a new contract and it goes down. New contract goes down. So the fact that we're at a low is basically means that the valuation here can actually be the same as here because of the time value decay that happens in futures. If you don't understand that concept, do a Google search for time value decay of futures or time value decay of options, and you'll understand why this can ultimately go to zero, even though the volatility index could be at 20, or, well, I think it's right now it's at 16 or 15, something like that. But this can go to zero, and ultimately they will roll this back, split it, or roll it back, 5 for 1, and it'll go up to $50 again, but there'll be 1/5 the number of shares outstanding on this. So don't be too deceived by the fact that that's moving to new lows. All right. So my ratings, bullish on stocks in both markets. I'm still holding my bullish rating on gold, but short term, this could be neutral because it is breaking down a little bit. I want you to be cautious with gold. I've kept oil at bearish, but this could turn to neutral, a little bit of an upgrade if we break that downward trend line. The strong jobs number broke the U.S. market out to new highs last week. This may bring about a concern of interest rate raise, but so far the market remains in that bullish mood. Gold is pulling back, but it remains in its upward trend. Oil trying to reverse its recent weakness, and the slide of that. Fear is very, very low, and that is complacency, and that is often the condition that can bring a sharp correction. But you don't need to worry about that until the upward trend gets broken. So stay bullish, but dance close to the exit door. That has been the Stock Scores Market Minutes for April 8th, 2016. Have a great week in the market and trade well.